All right, welcome to CEO Money. I'm Michael Yorba. Thanks for joining with us. I have Yonah Weiss, Madison SPECS on the show with me today. Yonah, welcome to the show.
Thanks so much, Michael. It's a pleasure being on your show.
I'm glad you're here. All right, what does a cost segregation study entail?
It allows for a property owner to significantly lower their income tax through a process, an engineer process of surveying the property and breaking down the different values of the property to get faster depreciation deductions. So in short, large deductions, income tax deductions for property owners through this specialized engineer-based service.
Why hasn't my CPA told me about this?
Well, most CPAs cannot conduct such a study because, like I mentioned, it needs an engineer. The IRS actually requires an engineer to break down the value of the property into these little more detailed amounts and values to conduct this study. And most CPAs do not specialize in this. Large CPA firms may have engineers on staff to do this. Otherwise, you would need a specialized firm like ours.
What about raising red flags with the IRS? Will this do that?
Not if conducted properly. If following the cost segregation audit guide that the IRS put out, which has 13 principles of a quality cost segregation study. So we follow those. If you don't do that, it might raise a red flag.
What about if in the event of an audit? What happens then?
So and that happens to people, right? No one wishes for it, right? But it does happen. And in the event of an audit, if you have a proper cost segregation study done by a reputable firm like ours, we stand behind our work. And for example, we have 100% no change in all of our studies that have been looked at by the IRS. And we stand behind with no extra charge. It's part of our service that we stand behind our work and will represent you in front of the IRS.
Give me the range of properties that you can do a cost segregation study for.
Sure. So in theory, it could be done on any type of property as long as it's an investment property or business property, not a personal residence. But generally speaking, we look at properties purchased for over $1 million and upwards. And we've done a number of billion-dollar purchases and upwards of that. So, but really the starting point of real benefit is when the property is going to be $1 million and up.
Okay, does cost segregation have to be done upon purchasing or construction of a property, or can it be done, say, on properties that are acquired within the previous tax year, like Form 3115?
Yeah. It can be done at any time, and the truth of the matter is it's very much for some people it's a timing issue, right? If I don't have income being generated from the property this year, I may not want to take those extra deductions. So you can actually get the tax benefit retroactively, which is amazing. All you have to do is, if you bought a property 2, 3, 5 years ago and you never heard about cost segregation, or you never knew that this tax benefit is available, all you have to do is fill this form, like you mentioned, 3115, 3115, and as a service, we actually fill that out for our clients. And really, it's a service for their accountants, because we're not an accounting firm, but we have this specialized service and work with your accountants. So yeah, you can get this benefit retroactively.
Is there a downside on this?
The only downside would be if you're flipping a property, you're not planning on holding it long term, it may not be the best benefit. And the downside might also be if you don't have the need, like I mentioned before, for extra tax deductions. So there's really no benefit. The IRS is not going to give you a refund check for this. It'll just put you in a passive loss, put you in the negative, and you'll just have to carry that forward to the next tax year. So it could benefit. So that's the major downside. There may be something called depreciation recapture tax, which is upon sale of a property. But again, that's, finance 101 is that I'd rather have the money in my hand now and not pay the IRS when they say, hey, guess what? You don't have to pay me. And so you can say, well, should I pay the IRS or should I take this advantage and keep the money with me and reinvest it?
Exactly, or at least get the interest on it. The recent tax reform, how does this affect cost segregation?
It's actually become a huge benefit for cost segregation, Michael, because the tax reform that passed included a law called bonus depreciation, which allows you to take these extra deductions that normally would have been spread over a 5 or 15-year period, as opposed to a 39-year period or 27-year period. We're accelerating that to a faster rate, 15 years, 5 years. However, the bonus depreciation allows you to take all of that in the year number one, the first year of ownership of the property. It's called 100% bonus. So that's like huge, huge income tax deductions, like multiplied by 5 or 10, what you would be able to do with a regular cost segregation.
Okay. What about the cost to do this?
So it used to be when this was started 30 years ago, only the big tax, the big four tax firms were actually doing this. And they used to charge upwards of, $20,000, $30,000 for such a study to be conducted. Nowadays, it's cut to a fraction. And, we're seeing prices about $5,000 for a study. And that's a scope of work fee. It's not contingent on your benefits, whether you're going to get $100,000 of tax savings or $1 million or $100 million. Our fee is the same. It's based on the scope of work.
What makes Madison SPEC different from other cost segregation firms?
I think it has to do with our quality of service. We love our clients. We go the extra leg. Like I mentioned, we'll fill the form for you. We're competitive on pricing. We'll stand behind our work at no extra charge in front of the IRS, and we do our best to service clients. And our experience is really one of the greatest in the industry nationally. We're a national company, and we've done
all over the country. Okay, good.
All 50 states, yeah, absolutely.
What's the biggest project you've ever worked on?
The biggest project is actually, we had the honor of doing the Rochester Tech Center in Rochester, New York, which is, I think, the largest commercial property in the United States. It's over 4 million square feet of office and industrial space, plus miles upon miles of parking lot and pavement, which the engineer had to walk that for 2 weeks. We had 2 engineers there for 2 weeks, doing the survey of that property. But we've done a number of large skyscrapers and, multifamily portfolios, upwards of $1 billion purchase prices.
Give me the most interesting project you've worked on.
The most interesting project I worked on recently was actually, skilled nursing facilities are actually really interesting because there's so much benefit that's in there. There's all this extra, the 5-year property, the personal property that gets over a 5-year period, deductions, there's tons of that. So, it's also a lot of fun, for the engineers to go and see, the patients and do a little visiting there, but that can be interesting.
Sounds good. All right, Jan, thanks so much for being a guest on today's show. I'm glad you were able to walk this through. I've got a few people I'm sure can use your services right now.
Well, I appreciate that, Michael. And, likewise, if I can help in any way for you and your clients, would love to make some synergy.
Appreciate it. You've been watching CEO Money with Michael Yorba. Thanks for watching. Like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.